Hi there, you're watching Market Cafe on ET Now with me, Shreyansi Singh, and over the next few minutes, I'll get you news and updates from within the country as well as across the globe, tell you which stocks you should be keeping on your radar, and tell you what the brokerages are saying as well. But first things first, let's take a look at the handover coming in from the Wall Street. But before we do that, quick note that the trading is expected to be relatively muted during the week. The New York Stock Exchange, in fact, closes early on Tuesday for Christmas Eve at 1 p.m. ET, that is, and the market is also shut on Christmas Day. You do have the tech-heavy nasdaq composite that gained 1%, the Dow Jones Industrial Average that added 1.2%, while the S&P 500 rose 1.1%, but the rebound was not enough to overcome losses earlier in the week. All three major averages, in fact, finished the week lower. So when you take a look at the nasdaq, that gave up 1.8%, while the Dow and the S&P 500 also both shared around 2% coming in. Now, after a tumultuous week, you do have the market that is awaiting a so-called Santa Claus rally, that may help the market in 2024 on a high note. So that is largely what is being penciled in at this point, of course. You did have, of course, stocks recoup losses. So in terms of daily moves, you did have the Dow Jones higher by 500 points. Just wanted to quickly mark that before I tell you that the second half of December, of course, is also typically the second strongest period of the year for US equities. So that is also something that investors are eyeing. And in terms of the month-to-date move that we've seen coming in, for all three averages, you have the 30-stock Dow that is down 4.6% in December, while the S&P 500 is off 1.7%. Even when you take a look at the tech-heavy nasdaq composite on your screens, that's also bucked the downtrend, rising 1.8% this month. That is the one that we should take note of. So that's largely the kind of handover that we have at least coming in for Wall Street, and even the kind of expectations that we have for the Santa Claus rally. But let's also take a quick check on what the oil prices did then, because oil prices were little changed largely at their settle as markets weighed Chinese demand as well as interest rate cut expectations. After data also showed cooling US inflation. Now, Chinese demand and tepid Chinese demand, in fact, is something that the market has been taking a look at for a while now, for the last month or so. And you do also have interest rate cut expectations that have been largely on the radar for oil prices as well. But when you take a look at the moves coming in for Brent as well as WTI, Brent crude futures closed up just 6 cents, or about 0.1%, around that $72 a barrel mark. And when you take a look at US WTI as well, an uptick of just about 8 cents coming in there as well, 0.1% uptick, mirroring the kind of moves that Brent also saw. $69 per barrel is the kind of level that you're looking at when you take a look at US WTI as well. And in fact, both benchmarks on a weekly basis ended the week down by about 2.5%. So that's the kind of handover that you have. Similar moves coming in on a daily as well as weekly basis for both the benchmarks. And you also have the US dollar that's also retreated from a 2-year high after data also showed cooling US inflation 2 days after the Federal Reserve cut interest rates. But you also have a trimming of the outlook for rate cuts next year. That is something that the market is also keeping an eye on, and a weaker dollar, of course, makes oil cheaper for holders of other currencies, while rate cuts also spur economic growth and boost oil demand. So definitely something that the market is keeping an eye on. And in terms of